Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, August 7th, 2024. I tell you, it just keeps getting more interesting, right? I'm going to bring that all back into the conversation, but look what I did today, folks. I actually added some labeling. So you've heard me talking, going on, it's like I'm leaving it open because there's too many possibilities and it's not real clear. Well, finally today, it seemed to have made the picture clear. And I want to add one more thing that really gave confirmation, and it was the option flows. And that's going to be separated, and it's because it's much higher data, and it says you kind of have to really have an understanding of what is going on and how that then affected the underlying and the index. So, because what happens when certain levels get broken, and I'm going to go over that, it doesn't really leave to question for a trader who has that position on what they need to do. It becomes abundantly clear, and they must just react. In fact, the algorithm will just react because it's receiving the data and it just goes and does what it needs to do to keep the position in alignment with what's going on. Now, so here we are. We've gone through many iterations, but here's the A of 4. Here's the B of 4. So that I thought that could be the C of 4 down there. But then today, what happened and what happened after, and what caused it, brought about 1, 2, 3. And this was the 4. And that was always kind of, I kept it in the back of my head, but I did not want to start putting it out because there were too many at that point. There still were too many what is going to be preferred and what's going to be alternate. As it stands right now, I'm going to leave it like this for right now. Now, the alternate count is that this is 1 of C, and this is 2 of C, and we're entering into a third. Now, if you just take, let's see, why does it do that? If I'm just going to open this up now and look. So really, 11 a.m. Eastern, the options flows changed, and the puts and the calls both were getting sold, and so that pushed the flows down. And now we went through the 5,300. And don't forget this morning that part of what created the upside was that the market surpassed a level that basically rang risk on, which means they put on that trade, which is sell volatility, buy underlying volatility. And 11 o'clock changed, just immediately changed. And they started selling. And the flows really took a nosedive. And when it broke the level where it was risk on, they had to make a decision real quick. Okay, is it risk off now? Holy crap. And so that aggravated the selling. So now I want to point out in the S&P a really important level. I need you to look to see where this thing closed today. 5202. I want you to look down. I got to move this so I can bring it out. Did it go back in there? It did. I have to bring it out. The SPX, I'm going to put it right there in the middle so you all can see it. Oh, no, come on. Let's do that again. The SPX closed at 51.99.50. The futures market closed at 52.02, and there should be about $25 or $30 of the premium still in that future over cash. Close to $3 a premium. So what are we thinking is going to be coming tomorrow or overnight or whatever? A continuation. Now, what can the market do? And so it's the two that I just gave you. Either it's completed the internal 4 within the C wave, and we're now going to come down in 5. And 5 can be a humdinger. Remember, I've been talking about even just under the minor 4, it could go the 50% and not break any rules and still be a minor 4. That's 47.80 support. That's basis the ES. What do we have before that? Well, we have 1.618 at 51.06. Now, no, I don't think it's going to hold because there's too much that's already happened. So I think it'll go through it. That brings us down to 5,000. And breaking the 5,200 and in the ES 52, I believe it was 28. That brought about its own get out of the way type activity. So if that picks up when we reopen and carries over through Asia and carries over through Europe, we could be knocking on that 5,000 door tomorrow. Don't forget that the world is really believing that the United States is in trouble. Our markets are in trouble. We're heading into a recession, and now it gets plastered everywhere, right? We have all this news, 24/7 news, business news, blah, blah, blah. And so it just spins the narrative around the globe to make money. So I kind of sometimes have to take a stand back, but what I'm really just happy about is getting some labeling on there and putting some support or form around what we can expect. Now that would be under the minor 4 that this is the C wave, and it's coming down and finishing the 5th wave. Now, I honestly, I have felt we could go down, spike below, but spike right back up. Now, that's a big if, I got to tell you, because if it spikes down and goes 50 points, $50 below, then it's like, that's no, too much. And in fact, I believe again in the ES, that equivalent, that 5,000 equivalent is actually 5,000 like 20, 22. So it's up there because of the premium in the futures market. So going even to 5,000 in the ES could push it closer, but hold in the cash market. So again, folks, it's going to get interesting because the futures market, because it trades after the cash closes and during when the cash is closed all night. So here's the deal. If it is going to be one of the alternative counts, the alternate counts, then if this down to here was 1 of C and this was 2 of C, we're going to go through this like, yeah, you know what. And so that really does bring about, I got to push this higher, some much different numbers. Yeah, it brings very much different neighbors. But even if we're going to keep it in a minor 4 and we're looking at the 50%, it breaks that put wall and drops. Now, if it does it, that's what we would expect. If we're in the 5 and we're basically maybe coming down in what, 1 of 5? Right? Again, we take a peek, look, it's just all straight down. And we had a little bounce, even a littler bounce, but it's straight down. So it's difficult to peg that with anything on an hourly chart. And that I have to tell you, because I am an older Elliottician, we always confirmed and work things to our hourly chart. So I'm not looking to confirm a move on a 15-minute or a 5-minute chart. On an intraday basis, I do, of course. But when I'm looking at like a little bit larger picture, moving up instead of moving down, I keep it on the hourly. All right. Be prepared. Please be prepared. Now, moving averages on the hourly. The 20 broke the 50. So here we go. And the 13 is already just way ahead of everybody, as it should be. We are now in alignment to go down. Basis the moving averages. But here we go. We look at our RSI, and the RSI is kind of telling us, well, we have fallen out of the chop zone, because when it sticks inside here, it's kind of the chop zone. It's like it could get a little choppy, but it just kept going. And so it's about ready, like below 30, oversold, which could give us another bounce. And then I would make this 1 of 5, even if it comes down into here. So lots of things happening technically that will overflow into the price because of options, because of the news, because of all this stuff, because of how some of these individual stocks are trading. I mean, literally, I got to open this up again, because this is, oh no, I can go over here. I'm going to come down to NVIDIA. Look at NVIDIA's range today. $10 range, which pre-split would be a $100 range, which it could do, but those were big days. So it traded as high as 108.80 and closed at 98.69 regular session, and right now is 395.80 at 396. So, okay, folks, well, what was all of that? Had to have it because, oh, that was a bottom. We're going back above 100. Well, that's how they were trading it. But didn't happen. Now what? Got to get out of all those positions. So back over to the chart. I believe it'll go down. Now, tomorrow's Thursday. Let's see what we got in terms of numbers. And we have initial jobless claims, which is forecast to be 240,000. Last time it was 249,000. That was a bit of a surprise, caused a little bit of a tip. And we have wholesale inventories. And the median forecast is 0.2%, and last time was 0.6%. Now, we also got the Richmond Fed President Tom Barkin out there talking somewhere tomorrow. And on Friday, folks, get this, on Friday, August the 9th, there's no data being released. Maybe some earnings in the morning, but no economic data. But it's a Friday expiration in a falling market that has been up and down, forcing risk on, risk off at a whim. So it's going to be a very interesting trading day. And again, I have to be honest, it's like a lot of this was truly difficult to trade, particularly in the NASDAQ, because you had Apple running in one direction. You had Tesla going in another direction. You had them coming in after Microsoft. Then they have going for this one. And so the market was jumpy. It would fly up 10 bucks. It would drop down 20 bucks. It would do this and then just inch and go around. And even though you're like, oh, I'm going to get long because I think that we're going to rally now, and suddenly it would stop. And the trade, and I'm not kidding, one lots, the trade would be $500 to $700 against you before you could blink an eye. And I'm trading off of a 2-minute screen. So, it gets really gnarly sometimes in the NASDAQ. And so you can see it on an hourly, just kind of the way it goes. But I think that part's going to continue. unless we get the gang up. So tomorrow could be another down 3, 4, 500 day. And that would, in the ES, it would be like another 100. And another 100 puts us down here at the 1.618. If we drop 100. And in fact, if we drop more than that, we are entering the danger zone. And you can all pull out that song from many of your favorite movies. Tom Cruise, Maverick. So anyway, that's the S&P. Let's go take a look at the other beast, the NASDAQ. All right. The NASDAQ's pattern, obviously similar. And actually, I can do it here. How I counted these out is here. This is where, I'll show you exactly what I did. Came down and did the line chart. Look what the line chart showed me. That the real low for this sequence down was here. And so it spiked a little bit lower, but it came back, and that's what's the close. So I take the next one, and that's the one I'm using. When I go back, go back out and go back onto my bar chart. So that's the finishing point of 3. And then we have oh yeah, it's kind of, okay. A, B, C, X, A, B, C. It's ugly, but it's almost like either that or I gotta, maybe then if I come back to here, right? Then it could be ABC, X, ABC, X, ABC. So it could be a 3. And even when you're learning Elliott, I want to tell you, it's like you learn that things are interchangeable. Oh, I can count it as a triple ABC, not as common as a double, or I can count it as a double. So either way, to me, I'm going to leave my 3 there. I'm going to count this as a double. And so that puts us into that 5th wave. And the S&P is exactly the same in terms of it. It is probably over there. I think it is a triple. So here, 1, 2, there was a big third. But then again, see what it did? Very little pullbacks, not amounting to much. That's a third wave. That's what a third wave looks like. And folks, I know what's happening here. 1, 2, 3, 4, 5. So before you get into this 3, it's there. All right. So what is going on? Where can we go? Same deal, fall off the face of the earth. At least that's what it felt like. Okay, so if we're in that 5th wave, well, then we're expected to come below 17,351. And that would be here. That's the interesting part. This is 17,351, but this is actually where I'm putting the low. So it would have to come below 17,351. And, well, you're going to see because 1 was so small, I'm using very high fibs. And you just multiply them out and you get them. But I tried to stick to fibs, 5, then 8. And even at 8, it's not quite all the way down. But I'm going to leave that there. And I'm not saying this is the market's going to stop like a rock and go like, that was it. That's the fib. It could. But I do believe that we will break here. We will break 17,351 as we head down to our next level. If the 4th wave comes in at 50% retracement, that's acceptable as long as wave 4 does not overlap wave 1. Well, wave 4, wave 1 is not even in sight. So we don't have that threat. So therefore, the 50% marker is A-OK. And I'm going to open it up a little bit, and there it is. Now, what do we have here? 1.618 is where wave C will be 1.618 times the length of wave A. Another classic, fib levels for C waves versus A waves. And you can almost say third waves versus first waves, maybe, but not quite. But I know people that do it. Now, so that fits. If it were to come all the way down, it's just that people are going to be like, oh my God, we were just up. I'd have to go way back above 21,000. And now we're going to drop below 17,000. And my answer would be yes. Now, this is where the other conversation comes in, that this just looks too big, it's too fast, and we need more time. I continue to respect that conversation. So again, even when I bring it down here, I can say ABC, I can say X, and I can do another ABC. Okay, that can happen. We can burn time. It doesn't necessarily appear like that's going to be the case, but we've seen this before where the market just suddenly, like right there, they just went, no, buy, just keep buying, just keep buying. Well, they can come in. It was during the Asian markets. They can come in and just kind of go, no, we're just going to buy, just buy. And if they do, we're going to end up back up here. Now, I'm not necessarily looking for that, but folks, it's out there. And because of the high and the switches and the exposure through volatility, do you see that it's like Monday? Today's Wednesday. Monday, the VIX, the cash VIX versus the future was like at 64. And this, the future, I think I saw it as high as 40, maybe. They could not wait to sell this thing off, to bring it back down and to sell it. And to me, it's just like, guys, I think we need to step out of our bubble called we just trade the market and realize what's going on and what you're sending out. What is your narrative? What's kind of getting a little bit confusing there? And I think that could be part of it. Now, back to the NASDAQ. We saw some massive turnarounds here. One being in Meta. And I'm going to thank Sasha over in Germany who caught the news piece. I guess on X, Elon Musk has said that he intends to buy Facebook and Meta, Facebook/Meta. And I'm sure Mark Zuckerberg was like rolling in his bunker with laughter. But if you don't know, there is a adversarial relationship and each has challenged the other to a fight. You know, Mark Zuckerberg studies the martial arts and he's challenged Elon Musk to a fight. So that's all out there corporate level. Now, that suggests then, again, I got to go over my market watch so we can look at, I wanted you to see it. There we go down. Meta, ding, 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 510. And the low's 486. And it's bid lower. So it's like, okay, what were you all thinking? But I'll tell you when those call options stopped, pretty much at 11 a.m. Eastern. And then it was bing, 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 get out of the way, smack. And a lot of the stocks. All right. Oh, that's not what I wanted. I also, no, I don't need financing rates. Folks, thank you. So back at the ranch. Here again, I think it's a little bit different here. It could be one of C, two of C, get out of the pool because the sharks have jumped in and they will just attack anything. And then I think we could quickly come down and smack through all of this. And then, of course, it would be something much larger. Again, my point here, I'm going to use that this is an AB, 1, 2, 3, 4, 5 to complete the C wave. Or we could work this to be a 5. And it's an AB, a wave 1 of C. A wave 2 of C, not a 3 and 4, 1 and 2. And we're just dropping into the third, which is probably going to resemble that, but in over here. So a lot of damage can be done, and that's the alternate. Now, as just a quick reference out, again, I do thank the people that have brought it to my attention about other Elliottians saying that the top that we had in July was the finishing point for primary wave 3, which means that we're in a primary 4th wave correction, which does change the levels. And Sasha actually worked that one up. And there are levels that the C wave could likely, if indeed it is, the C wave could get as low as like the high 10,000s and up in there. Yes, disastrous. But you know what it takes me back to? And I can't go back to that primary B wave, folks. Somebody keeps asking me if I can. I can't. It was invalidated, so it's left off the table, and you work with what is valid. So that particular count was invalidated when the market broke above 1.382 resistance. That was the irregular B wave resistance level, and it substantially went above it. So it's out. And now we're over to, we have a little bit of a different count. But what I will say in defense of that count, I had a primary C wave that would have come down sub 10,000, and then it got adjusted to about 10,000. It's kind of interesting how Fibonacci and Elliott just kind of interweave their way around a market. So that's all still out there. But right now I work with what's in front of me, and I got pretty happy with it. I was able to go 1, 2, 3 and put a 4. Now here in the NASDAQ, it's a little bit clearer, right? There's the 4 working the 5, and here are the fibs because the wave 1 was real tiny over here for this minuet wave 5. So we have 17,659, that's 4.236. I just leave it there because it could be a resting point. And then we get a little rally. And then I've got the 382 for the minor, and that's at 17,473. I suspect since we've already been below it, it'll do it again. 5.618 is 17,366. Not good enough, but I left it because there's a cluster. So we could see a lot of this. Now, 8.618, keeping your fibs, is 16,729. Then we go back to the minor 4, and the 50% retracement level is 16,390. And then one more time, I come over to the C wave at 1.618, where wave C is 1.618 times the length of wave A. That comes in at 16,318. So I have a pretty decent, I actually here, but I think this could help put some brakes on. We have a decent cluster, and it doesn't break any rules coming down to the 50. 382 is most common. 50 is second. Now, what would be challenging is if this thing came slicing down through all of this without stopping. Then, but we have that. We have it. We've been talking about it. So trust me, it's going to be risk off. Massive risk off. And that's going to create a huge trend. If you were looking at the trend, you can't see me. My hands are pointing down. It's going to go. That's my take. And people are going to say, that's a crash. It's like, okay. Yeah, I get it. But then again, so were periods in the pandemic. So we're periods in the .com bust in 2000. So we're, many things that we've gone through had been periods of it that we're crashing. I was like, that's what it feels like. And when you're in the market trading it, it really feels like it because it'll slice through things as if they don't exist. Okay, so I am expecting follow through. Market is upset again. So, it's following through. But then again, I think that what's been good is that we have stayed connected to the original that it was a minor 4. And I'm going to hold on to that until the market tells me we just blew it out. I was like, okay, similar to what they did, when they blew out that primary B wave. Now, I get that I've got a bunch of different types of traders that come in and they like to hear what I have to say about the NASDAQ and the S&P. But I'm going to have to just ask for a little bit of leeway here because I'm adding a lot of other technical factors that will affect the Elliott, that will affect the market a little bit harder than the Elliott might suggest. And therefore, we have our alternate count. And right now, again, I'm telling you, Sasha did his work. And again, it's in the trade room, but he was going over that this morning in the trade room with folks about that it could be a primary 4th wave. And he was showing how, which I'm so appreciative of. And he knows that because I thanked him a million times. Anyway, I think that we are going to see additional downside. How fast and how hard will again depend on what happens in the flows. What happens in SPX? Well, it's already down below 52. Is it going to gap? Is it now when we come to open tomorrow? Is the SPX going to gap, which would give you strong confirmation going down? So, but the ES will continue to trade. So right now they're going to try to bid it up a little bit. All right, I am going to end it here. And it should be a decent trading day. I'll keep my fingers crossed. The next Elliott Wave Daily Update will be on Thursday, August the 8th.